review. We have quite a lot of money in our bank account and everything else. I feel like we're doing pretty well when it comes to everything. And so we have our account, $13 million, and our annual cash flow is pretty high. So we're going to find some investments to do for long-term investing. So I feel like we're going to do pretty well when it comes to this stuff. Interest rates are currently easing. So we could probably buy a little bit more bonds. That way we can get a decent return. But I feel like it would probably be better, honestly, towards going into more growth stocks and everything. I want to have at least $3 million in our portfolio. So I got the good old calculator out. Just so we can focus on what is going on and everything. So I'm going to look at my stock portfolio. We have a big loss in this one. So I'm feeling like buying maybe 1 million each, which is quite a large amount, but we're going to put like our 3 million and we're going to have the 10 million towards growth. I feel like that's like a good strategy. So we're going to put $1 million into the stock at $20.41. We're going to buy 48,000 shares, 48,995. So now we have about $1 million in that stock. And so what we're going to do is we're also going to buy $1 million worth of Florida Lights. I feel like they're probably a good deal at this moment. They're still profitable, almost near the book, and their earnings have been somewhat consistent. And their earnings are supposed to be 89 cents a share, so they might beat this quarter, they might not, who cares. I'm going to treat these as buy and hold investments. So we're going to put $1 million into the stock. Divided by the 34.86, we're going to purchase 28,000 shares. 686. And I'll put $1 million into another stock besides utilities. Yeah. So where do you see we dollar cost averaged a bit, I guess. It's pretty helpful. So we're going to find a nerd industry. That way we don't have as much correlation. So whenever it comes to diversification, if you diversify across industries, for example, with U.S. gas and electric, this is technically counted as diversification, but it's high correlation. So like, if you were to buy it, if the industry does really bad, then basically everything else is going to do really bad in this industry. So it's helpful to diversify across different industries right over here. And it's also helpful to diversify across different asset classes. For example, buying bonds, buying gold, buying everything else. For example, I think that silver might be a bit expensive right now. But wheat, it might be a bit cheap right now. It's not the cheapest, but it's still pretty cheap. Because if you look at the technicals, it's fallen down quite a bit. For example, it's fallen way behind that bottom, so there has to be a little bit more downward pressure, or there's going to be more upward pressure. So yeah, gold, right now I'd say is very expensive. Gold is actually kind of a way to hedge your bets too. Stream quotes, commodities. I don't know why I did that. My mistake. Yep. So we bought an extra $1 million in stock. So what we're going to do is we're looking for industries that are not correlated as much with just the utility space. So I think another good one is grocery. Global telecommunications ain't bad. I'm going to go for retail. But I'm going to go for either discounters or drugstores are doing pretty well at the moment. Discounters are supposed to do well over the long term. So I think discounters right now are the winner. We're looking for a good cheap company. Has good returns on capital. Pays a dividend. So I think Peak wins so far. They're a little bit expensive, but they're not as expensive as this one. This one actually looks like it's the best bet. Pays a decent dividend. They're a bit declining a little bit, but I feel like everyone else is declining, so I feel like it might still be a good buy. So yeah, we're going to probably buy $1 million for this company. It seems a bit expensive. $1.70, how much are they estimating? 25 cents, so they might actually lose this quarter. And they might not be as profitable this year as last year or the other years behind. 15 times earnings, that ain't bad. It could be better. debt to equity, they're actually pretty safe. Basically, they owe 2 cents of every dollar. Dividend payout is $1.12. I wish they included the payout ratio, but sadly they don't. So I can't tell whether or not the dividend will be safe or not. But you can basically tell by also looking at the research, 25 cents a share estimated. So 25 times 4, that equals $1. So their dividend is kind of not safe at the moment, especially if they report 25 cents. But I think they might beat. Who knows? But over the long term, I know that this industry is going to improve over time. So I'm going to buy $1 million, and then we're going to put the other 10 towards growth. 2, 8. I'm going to buy 38,000 shares. 3805. And now we have $10 million in cash. Now I might as well put 200K into bonds. So I feel like the government is easing. I actually might want to try to research. You can use this little recall database, and I think you can find corporate bonds through this way. You can do convertibles right over here. I'm looking for 0% premium because I don't want to pay a lot. So what I'm doing is I'm looking for deep discount bonds that are safe. So the reason why they're for a discount is because a lot of people probably don't like them as much, or because of the interest rates have went up. So that makes them a lot less worth it. But I found a pretty good candidate in Mazda Europe. This one pays 8% yield to maturity and 3.5. So the yield to maturity also includes the market price. So every bond, it matures at 100. So we're going to be buying it for 65 cents on the dollar. So I feel like this will be a really good company, and they're still profitable. They have some decent amount of, they have enough to cover their assets. So I feel like they're definitely deserve the AAA range. So we're going to buy some of their corporate bonds that expire in 2038. And yeah, so the public trade for face value is 400K. How much would this cost? 20. Oh, no, I'm not going to buy that much. I feel like that would be a confidence play, but yeah, so it's about $1,000 each. I'm going to buy 270 of these. Yep. And so we have, I could buy probably 111 more. My mistake. Oh. Yeah, so they expire in a little bit of time, but I feel like if interest rates do decline a bit, we'll make a bit of a capital gain. I might as well buy extra 36. I want to load up on these bonds because I like when they're at a deep discount, because then you get a little bit of a capital gain. You also get a higher yield. So it really helps when you want to be able to get some stuff. So that really helps. Yeah, so we're basically be diversifying this episode. I'm not really going to aim for much high growth at the moment because I feel like I'll be pretty worried about that stuff. But I could probably look around. Biotech, it's actually not good. The environment's going to be a little bit worse over time. So I feel like right now is just a perfect time to carry some cash and cash equivalents. Precious metals and mining might actually be a good time to short or sell a call again. Especially because I feel like this one is overvalued. Yeah, I might as well sell a call because I don't see much opportunities in the marketplace right now at the moment. 34 cents. They are profitable though, that's the problem. I'm going to sell a call. We might get burned. No, it may not get burned. I'm going to sell a call on this company for a strike of 14. And I want to get $2.50 premium. I could do a long call. Let's try a long. Let's try see if this burns us or not. But yeah, we're going to receive $6 million off this sale. So worst case scenario, I feel like we could lose more than $6 million. But we're doing a long call. So yeah, we got to keep at least $6 million in the bank. So hopefully we don't get burned from that. So the strike was around $14, I assume. Strike 14. Strike is 14, so it's a little bit above the strike. Pretty bad, but we did a long one, and because of my research, I believe that the precious metals in mining is going to decline over time. It says like the near term but yeah, likely to reach profit soon, basically. But like they're highly leveraged, but they're gonna make a profit off their thing. But like if the industry declines a ton, I feel like we can make a ton of money off this call that we did, or we could lose a ton. Yeah, so we're gonna probably lose a ton, or we might make a ton off this option. And rates right now are really low, so we could look at our bond portfolio. We made quite a bit of a capital gain off that. So I might want to look for some more bonds and cash equivalents, just because I feel like it's a good buy. Even though I feel like rates might not go down anymore, so it may actually go up. Therefore, it would affect our capital. Therefore, it would affect our portfolio a little bit. There's not any good bonds at the moment. I like when they hit 60s and 70s. This is pretty good. I would buy probably a little bit of this. But yeah, we're just going to play a little bit safe right now. We'll probably get burned a little bit, though. I'll probably buy 150 of this sucker. I feel like we're buying the exact same bond as usual. Yeah, we did. But yeah, we're just going to bet that. Hopefully the call we sold actually does really, really well. I'm also going to record another episode. I hit my time limit, so yeah. So what we're going to do is we're going to hopefully make sure that call works out. And anyways, I'll talk to you guys later, and have a good one.